What's up, YouTube? Welcome back to another video. You guys seeing the consistency, you guys seeing the videos coming out. I thank you guys, all of you that are in the comments that are supporting the videos. I appreciate you guys. Okay, so it's actually motivating me to make more videos, but off of that, right, let's get right into it, guys. Like I said, if you have any questions, concerns, comments, you could either hit me up on Discord, right? The only way that you're going to get my Discord most likely is if you're in my mentorship. That's the only way that you'll find my Discord, okay? But other than that, publicly, you can find me on Instagram or maybe just in the comment section here, and you can ask me any questions that you want. So points of interest. Points of interest. That's what we're going to talk about today, guys. Points of interest. What is a point of interest? How do you find a point of interest? How do you use a point of interest? Everything like that. I see a lot of, a lot these days that the point of interest is really kind of getting cloudy and foggy. And a lot of people really don't understand, how to use a point of interest and what it's meant to use for. Okay. So let's go back all the way to the beginning. What is a point of interest? What is a point of interest? What is the definition? All it means is an area that you're expecting the market to give you a reaction. That's it. That's all a point of interest is. It's an area that you're expecting the market to give you a reaction. Okay. So right now I'm on EU. You guys can see my chart. I'm on EU right now, right? And I have this 15-minute SE. Okay. This is a point of interest, which means once the market gets here, I'm expecting the market to give me a reaction here. Okay, so that's the basis of it. All you're doing is I'm waiting for the market to get here. And once the market gets here, then I will be scaling in, maybe go on to a lower time frame, or maybe you don't go on to a lower time frame. Maybe you stick on the same time frame. You don't always have to go on a lower time frame in your points of interest, right? That's another key. That's another gem for you guys. You don't always have to go to lower time frames for your points of interest. You don't always have to scale in. You don't always have to zoom in. Maybe you're just waiting for a reaction on that time frame, right? This 15-minute time frame, maybe I'm just letting the market get in here and I'm waiting for kind of rejections or maybe just a reaction from that area, maybe a move away from that area, something like that, right? It's not all about the time frames and scaling in, and it's not always about that, guys, right? The point of interest is not always about that. All right, there's many ways that you can use your point of interest. So now, how do we find our points of interest, right? This is going to be like the most technical part of this video where we talk about how to find your points of interest. So let me go ahead and show you guys. Now, as you guys know, right, I am a SMC and Wyckoff trader. Okay, so points of interest can really get I'd say, broad when you talk about it to the trading space. A lot of people mark out their points of interest in so many different ways, but I'm going to show you guys I want to say the right way, but the more high probability points of interest that you will find. Okay, so the idea behind your point of interest, guys, and as we go into it, you'll understand this a lot more. The idea behind your points of interest, right, when you're looking at the market and you're looking to trade the market, right, we don't want to just buy and sell the market from anywhere, right, because when the market can do whatever it wants. Okay, so when you mark out your point of interest, all you're saying is, okay, this area has shown me something, right, whether it be maybe you want to sell from that area or buy from that area. All you're saying is, okay, because of what happened here at this area, when the market gets back here, I'm expecting something to happen, right? That's what the point of interest is on I'd say a deeper level. I'm expecting something to happen here because of what the market previously done here. Okay, so what that does is when you have that point of interest, when you mark it out, all you're saying is, okay, I've just made my trading window very small. Okay, I've just locked in an area where I want to trade at. So what you're doing is you're increasing your probability of winning your next trade. Okay, doesn't mean you're going to win your next trade, but when you have your point of interest, you're saying, I'm only going to wait for the market to get here, and once it get here, I'm going to trade it because that's the area that I expect something to happen. So what you're doing is you're increasing your probability of winning that trade, especially if you mark out your points of interest in let's say, a more defined way. Maybe you have more confluences behind your point of interest. So all your point of interest is doing is giving you more probability on your next trade. All right. So how do you find your points of interest? So for this example, why was this chosen as a point of interest? Okay. Why is this a point of interest here? What is so special about this area? Why is it a point of interest? So I'm gonna give you guys like the the breakdown of finding a point of interest and how easy it is, right? So I'm going to go ahead and delete this real quick. We're going to go ahead and delete all of this. And we're going to mark out points of interest. Okay. So what is it about a point of interest, and how do you correctly mark out these areas, and how do you know the market's going to react from these areas? So it comes down to it, guys, is just understanding supply and demand. All right. So when I say supply and demand, I'm usually talking about Wyckoff. It's very easy. If you understand Wyckoff, it's very easy to find your high probability points of interest, right? If you understand who's in control of the market, buyers or sellers, it's very easy to identify it. All right. So we know that when we're talking about Wyckoff, we're talking about accumulation, right? We know that, and I'm gonna keep this very simple. We know that when we have an accumulation, right, some people know it as a range, and the market goes higher, right? This is a changing of hands. That means sellers were previous in the market and buyers got into the market, right? That's all I need to know here. So if I know that, you know, buyers got into the market here, what's going to be my point of interest here, right? This is a valid point of interest, and this makes it a more higher probability point of interest because first, it's not just a order block, quote unquote, and this is why a lot of people have problems with their order blocks and their and marking out the order blocks that work. I hear, you know, why does this order block work and this order block don't? Well, let me give you another example of this, why some order blocks work and some don't. So here we go. Let's make this even better. I'm gonna make this right here, and I'm gonna put this here. Okay, so here we go. These are two order blocks, right? We have this order block here, and we have this order block here. And I'm gonna actually make this bigger too, so we don't want to say it's because of the size. Okay, we don't want any excuses. So these are two order blocks exactly the same size. All right, so let's say the market comes down and this order block fails, but then this order block works. Why? Well, this order block had more purpose, or this area, sponsor candle, whatever you want to call it. There's so much different names for order blocks, sponsor candles, institutional candle, whatever you want to call it, guys. Okay, this area here, and Wyckoff traders, we know this as a reaccumulation. Okay, right? That's a gem for you guys. Reaccumulation. We know that's a reaccumulation, but this order block here has way more conformance than this does. Why? Because this is an accumulation. This is an accumulation of orders, which means buyers was getting into the market here to drive the market higher. That means this is part of that accumulation, whether it's mitigating it. We can see that we touch back into the area. So with this being that mitigation, or that first area that pulled back into here, that means buyers potentially got into here. This is just a reaction of what happened previously here. Okay, so it is much more easier for the market to fall through here because this is just a reaction of what already happened. Okay, even if this is a reaccumulation of orders, let's say this is a reaccumulation, this is a reaccumulation. This reaccumulation is always going to be stronger than this one. Why? Because first of all, think about it in basic supply and demand. We want to buy the market low and we want to sell the market high. Okay, so if we're selling here, where would we like to buy the market again? Down here at discounted pricing. So in reality, the order block, or the area that is always closest to where we started, where the origin is always going to be stronger than the ones in the middle. Okay, so that could also, you know, be implied into your trading plan, where you're only looking for areas that is close to origin, or, you know, highly psychological levels or something like that. So now going to the charts, right? Just a brief overview, and that applies for, like, you know, the other side as well, right? If you're looking to be a seller. But now let's get into the charts. Let's talk about these areas, right? So what makes this a valid order block? Well, let's go ahead and let's look at the market. The market is selling off. All right, that's all we need to know. So as the market is selling off, we have sellers getting into the market. What is happening here? What is happening here? So we have this huge area here as the market bought to the upside, and then we sold off. I already had a point of interest here. This here was my point of interest. All right. The market didn't come back into this point of interest, but I bet you in the future, right? You can quote me on this. I bet you in the future, once the market, let's say we start retracing, there will be a reaction from here, right? Whether the market, you know, gives a small reaction and then we go higher, or whether we, you know, I promise you the market will react from here. Whether it, you know, fails or not, there will be a reaction from here. How am I so confident in knowing that? Because this move above these highs costs money. Okay, what does that mean? There had to be buyers in this market in order for us to drive above these highs. So seeing this huge push to these highs, taking out this liquidity, right? So now let's zoom in. We have this huge push. What was the price action before taking out these lows? You can see this here is our price action here, which is a redistribution for those in my mentorship and those who understand. This is a redistribution. Look at these candles, right? We have an impulsive move towards the upside, and this was during news as well. Impulsive move towards the upside, and then the market sells off, right? We see this huge impulsive move to the downside. Only sellers, only banks, institutions with a lot of money can create these type of candles, guys. Only they can create these type of candles. So guess what? If they were buying to take out this liquidity, imagine how much selling pressure they would need to mitigate these orders, right? So that tells me that there has to be sellers here. There has to be, some type of institution that was there. This is what makes this a highly probable point of interest. Now let's go to the downside, right? Same thing happened here. What do we see? Same thing I was just showing you guys. We see that potential market is trying to buy. We see these lows that's creating ourselves here. And what happens? We go above these highs, all this liquidity, and look, we run through. Not even that, just look at the price action. Look at this huge impulsive selling to the downside. Look at this imbalance. Just look at this. And the market is selling off, right? So what does that mean? Where did all that start from? Where is the area before all that started? Here it is, this wick. I mean, if I go in, I'm trying to find to see if we have an actual candle in here in this price action. I believe it's just a wick, but this was also news as well. This was a news event right before the news event, but just look at this, guys, right? This here is our point of interest. Why? Because this is what created this move. This area did one or two things. It broke this low, right? We broke all this low here. We have all this impulsive move to the downside, and it created imbalance, right? That means there wasn't enough buyers here. That's why we have a gap, right? I know some people call this a gap, but that means there weren't buyers here. There were strictly sellers. There was more buyers here than there were sellers. When that happens in the market tends to come back and fill those areas. And what also that tells us is there was a lot of selling pressure here. That's what makes it a point of interest, which means when the market gets back inside this area, we would want to see the market sell again. And look what it did again. And no surprise, just look at this price action. We have impulsive move. We have an impulsive selling move to the downside. And look at the reactions back to the upside, guys. We don't see that same impulsive move, right? We don't see that same impulsive candle. And look what happens when we get back into here. So what does that clearly tell you? There was sellers here, right? We see that impulsive move to the downside again. Now look at the buyers, right? Look at the buyers. Look how the market is going now when we go to the upside. This is a prime example of a bearish market. This is a prime example of sellers being in control, okay? So it is easy for us to identify our points of interest. So what do you think our next point of interest is going to be? Up here towards the origin. Now I do have, I'm gonna go to the 15-minute candle. I do have a smaller point of interest inside here, and your points of interest you can define your points of interest way more, right? I do have a smaller point of interest. Only reason why this is because this actually traded back into this candle here. So I still want to identify this area just in case if we don't get all the way up here. But you can see my points of interest are usually near the high or the low that created a new change of character, that made a new low. You can see that we had an impulsive move from here. There's a lot of confluence behind my points of interest. Don't just go out here and look at a order block or a sponsor candle, institutional candle, and just mark it out and think, okay, the market should react from here and I should be looking for a buy or a sell from here. No, you have to be very, very realistic with your points of interest and actually have key points of interest. So guess what? If the market goes ahead and blows through all these areas and let's say we break this high, I'm still expecting the market to react from here, because I know after all of this, the next likely area for us to see sellers is here. Why? Because this was the impulsive move to the downside, right? And this is a huge area that I know sellers were a part of, okay? How do we know that? Like I said before, we had the market push up, take out all this liquidity, and then we push down. You know how much money it takes for the market to do this? This is called a redistribution, right? For those in my mentorship, we teach, redistribution, accumulation, distribution. And like I said, once you understand Wyckoff, identifying your points of interest is so easy. Why? Because once you know that this is a redistribution of orders, you know that there had to be sellers here. All you have to do now is go inside of that redistribution and figure out, okay, where do I see, those candles? Where do I see the impulsive move? Where's the areas inside of this huge area that's showing me, okay, we do have potential sellers? This is it right here. If the market goes above this high, I really don't expect us to hold this area, because this here is that that focal point of our redistribution. That's our focal point. Now, I would have loved for this to be, near the, top a little bit, but it is still a area. Okay. So when you're marking out your points of interest, make sure your points of interest are actually doing something. Make sure there's an actual cause and effect behind them, right? This is something I also teach to my students, is cause and effect. Make sure the areas that you're taking trades from, or your points of interest, make sure they have a cause and effect. So what do I mean by that? So what is the cause and effect of this point of interest? So why is this point of interest, like what makes this a valid point of interest? And what is some rules I can leave you guys, before this video ends, that you can find your own points of interest? Well, one rule is make sure whatever your point of interest is, make sure it actually did something. So doing something means you can see this area is what broke this low, right? Right, that is good. That is a confirmation right there. Okay, check. That is one point to why this should be a point of interest. What is another? What other confirmations are we looking for our points of interest? Right, this is a key confirmation. If the point of interest did not break a low, didn't create a new high, didn't create a new low, I don't consider it. Right, but another one would be, look at this imbalance. Right, look at the impulsive move. That is something else that we can add as our confirmation for our point of interest. Right. So seeing that impulsive move, we created change of character. What else? Usually I like to see my points of interest inside of some type of Wyckoff structure. In this case, this entire thing is a redistribution, right? We can see the market here has a lot of potential sellers that is getting down in here. And also I do know, right, we were watching this, and we know that this is a failed accumulation. We know that buyers tried to get into the market here. They failed, and this is what caused that failure. This is what created that failure for them, which means there had to be sellers here. So going back to that break of that low, break of the high, that is very key for our points of interest, that it actually created a new low, created a new high that we could trade from. Also, the impulsive move, right? Momentum is another confirmation that you can use for your points of interest. Okay. So that's how you identify your points of interest. All right, it's pretty simple. I don't have a specific time frame for my points of interest. It's just going in and seeing, okay, what did this area actually do, and why should I be focused on this area? That's how you find your points of interest. Like, just go in and just ask yourself, looking at your area. Let's say you're looking at a sponsor candle or an order block, and you're like, okay, maybe I want to trade the market from here. Okay, now ask yourself why. What did this order block do? Did it create a new high? Yes. Okay, that's good. Does it have imbalance? Yes, that's good as well, because we usually tend to see imbalance from points of interest, because that means there was a lot of orders there and the other side couldn't compete with that. So that is a very good sign. Impulsive move to the downside, impulsive move to the upside, that is a very good sign. Time and price, that is a very good sign. Usually points of interest, New York Open, London Open, Frankfurt Open. Remember these times. Usually you'll see your points of interest are during these times, because that's when the manipulations happen. Another important thing for your points of interest is, did it manipulate anything? Did it take out any liquidity? That is a very important thing that you can add to your points of interest to see, did this area take out some liquidity? Right? Did it take out some liquidity? If it did, then that adds it to the list. That makes it even that stronger, right? Ask yourself when you're doing this, so you're not just choosing random areas. Going back over that, guys, liquidity, that is a confluence that you can add to your point of interest. Did your point of interest, or did the area that you're looking at raise some liquidity, right? Did it manipulate a high or low or whatever the case may be? Impulsive move, right? Is there any imbalance from your area? Did it create any imbalance or anything like that? Making a new high or a new low, did it change character? Did it create a new character? Did it break a, BOS? Anything like that, guys, is very important. Asking yourself these questions and recognizing these things is very important for your points of interest. So those are the true ways to look for your point of interest, guys. I could show you, I could show you these all day. I can show you different types of point of interest all day, but I wanted to show you guys how to actually look for them. Okay, so now what I need you to do is go on your charts and, look for your points of interest, or back test these areas and see, okay, what areas actually gave a reaction, what areas didn't give a reaction. All right, so that is it for this video, guys. Identifying your points of interest is super simple. All right, it is very simple. Do not overcomplicate it. Okay, so just like you have confirmations for your entries, you have confirmations to identify your areas. Okay, there's confirmations for everything because the market is a probabilistic market, right? There's probabilities everywhere, so you want to make the probability in your favor as much as possible. Okay, that's why I see a lot of people taking losses, because you're just picking random areas without actually identifying what these areas did or what they didn't do. Okay, so make sure you're paying attention to that. Never just choose a random area because it looks good. All right, actually go in and see what the price action did. All right, guys. So those are some more gems for you guys. I hope you guys take advantage of it. I will see you guys in the next one. Peace out.